Okay, so this question comes from a lot of people, and the question is when a price gets into the zone I want to buy or sell at, how do I know when to enter, or what do I look for when I want to enter the trade? Okay, so we know that we mark up our charts and we use all of the concepts that we have learned throughout the days of trading. And let's start off here by marking up this specific pair, which is UJ. And I'm going to start here with this order block over here. Okay, so this is a bearish order block, and below that is a fair value gap or liquidity void, if you will, over here. Okay, so and we also have a fibs over here. So body to body, fibs to fibs, and if we look at the daily time frame, this is also a daily bearish order block. Okay, so back to the 4 hour. Here we have ourselves our daily bearish order block. Price came back down, traded into the 50% of this daily order block. Please do not write on my screen, that is disrespectful, otherwise I'll kick you. And when price traded into this daily order block, price again fell off of this daily order block, creating this 4 hour order block as well as this liquidity void to the downside over here. Gradually, as this liquidity void was filled, it came to a point over here where it had filled about 90% of this liquidity void over here in the zone. And essentially what I'm going to show you now is how to take yourself an entry once your confirmations or confluences have lined up with each other. So here we have this daily order block, we have this 4 hour order block, we have this liquidity void basically closed, as well as price coming into our 79% retracement over here. So for the purpose of this, I'm just going to highlight this zone over here in this teal color over here with this wick, okay? And I'm going to drop down to a lower 15-minute time frame over here on this candle wick in 15 minutes, okay? And if we zoom out over here in this zone, essentially what we are looking for, if we zoom in here at this price level, we are looking for an entry point using our lower time frame. So this is called either two things. They're in the BTM M circles, which is beat the market maker circles. They call this an LSB, which stands for last step broken. Okay, or in simple ICT terms, it is just called an order block over here. So LSB is done on a 15-minute chart, and it helps you to get entry on the 15-minute chart. So essentially what you're looking for is a bullish order block that gets traded through, and that order block is this one here. So that is a bullish 15-minute order block over here that gets traded through over here. Now, essentially what generally happens is you want price to trade through this order block and retest this order block, and then a continuation over here to the downside. Now, that did not happen in this particular scenario over here, and when price essentially does that and it breaks this order block without any willingness to go back up and test this order block, you can essentially say that you can sell at this zone anywhere over here, because you already have the higher time frame bias. That price is going to react on these higher time frame biases of this daily order block, this 4-hour order block, as well as this discounted zone, or sorry, this premium zone that we want to sell at. So we are using this LSB as a potential indication to us that we want to sell when it retests that level of price. And the same can be said when you want to buy. If we look at a potential buy opportunity over here on a peak formation low over here, when price turns, so mark that up, and you go down to a lower time frame over here on the 15-minute, you're essentially looking for an LSB. Okay, so an LSB is the last bearish order block because it is bearish and price breaks this order block over here. Price closes above this order block and retests this order block. When it does that, breaks out, retests, execute your buy. That is an LSB retest over here. Perfect example of the LSB, last step broken. And obviously you have to have your setup on your higher time frames to give you confluence to take the trade. We are just using the 15-minute to take the trade. Alternatively, what you can do, if you do not want to use LSB, you can use your fibs. So when you have a reason to buy or a reason to sell, you are using your fibs from the order blocks that break market structure. So is this order block here, I'm just going to mark it up in red, this small little 15-minute order block over here, mark it up in red so you can see it. This is the order block we are going to use that broke market structure. So market structure was broken over here, and we are looking for a retracement to buy, body to body. And there is our entry. So we have an LSB retest, or we have a retracement into discount for our entry based on the higher time frame premise that we have potentially a daily bullish order block over here, a 4-hour order block here. We are using the higher time frame confluences as well as now our lower time frame to give us entry. And this is the question I get asked. How do I know when to enter? Well, this is how you enter. Use your LSB. Use your fibs on lower time frame. You need to decide. Maybe you have both entry confluences. Maybe your LSB and your OTE intersect with each other, just like they do over here. LSB over here and OTE retracement. Pull the trigger. If you're not pulling the trigger, no money risked, no money gained. You'll just sit and spectate the charts for the rest of your life if you never take a trade. But having more than one confluence, having more than two, having more than three, when you have 5, when you have 6, 7, 8 confluences, you are setting yourself up for success. And this is how you would enter a trade. Okay, so that is what I wanted to show you. And a question I get asked very often is when or how do I know when to take trade? Okay, now anyone want to start with a question?
Hi, Darren. Shahan here.
Hi, Sham. Go ahead.
Hi, Darren. On gold.
Of course, yes. Gold. What do you want to know?
The The thing is, in gold, we are still bearish because it has made a source candle at 1990, I believe, and a breaker block. So since then,
On
the
which time frame? 4 hours, daily? What are you talking about?
4 hours.
Okay, are you referring to this area here?
Yeah.
Okay. Yes, I see what
So,
you're talking about. Here is our source.
and then we have a breaker.
Yes. What is your question?
The thing is, the gold is still bearish. So we is gold going to retest the source and go down, or has the order flow changed in gold to bullish?
What makes you say that it's changed to bullish?
It's not changed. That's what I just wanted to confirm with you, whether it's going to retest the breaker and go down.
Well, you're following the order flow essentially on this 4-hour chart. Okay, so
Yeah, it has been breaking the market structure and making all bearish order blocks on 4 hour.
well, then what you know about that is if you haven't been selling at these order blocks over here at the test of the breaker, at this order block when it was retested, again, it was retested. If you hadn't sold over here, then you could have bought over here based on these other order blocks that are in the chart currently over here. But you need to take into account what is happening on the higher time frames, the daily, the weekly. Okay, so if you look especially on the weekly time frame of gold, okay, you will notice that it has created a weekly bearish order block over here. And if you look closer, it tested over here the 50% of that weekly order block over there, and price fell on this previous week, well, 2 weeks ago over here. Then price continued down. Okay, so the idea is if we look at the monthly, this is a equal high that it had rated. So it had run liquidity on a higher time frame. And when you look at the weekly, you can see that price is now bouncing as a form of, we could say, retail support off of that level. Okay, although that is actually not retail support, we refer to this as a mitigation block because it is mitigating the orders, that is allowing the institutions to exchange orders that are sell orders to buy orders or buy orders to sell orders. So it is a mitigation block. They are mitigating the orders, they are exchanging the orders from bias of being bullish to bearish, or bullish to bias of bearish to bullish, opposite of what they were essentially doing. So they were going up, and when a mitigation block is created, so here would be another example of that. This mitigation block over here. Sorry, let me just create this line there. So just like they call that retail support, price goes up, and that's a bearish order block. So let's just zoom in here. This is a bearish order block. Price goes down over here, but then trades through it. Okay, so when price comes back to this level, they are mitigating the orders here so that they can continue the bullish trends. They are mitigating. So they are exchanging their sell orders over here and over here for buy orders. They are mitigating their orders, okay? And that is a mitigation block, and then price continues. So that is a likely scenario for gold to continue based on the fact that this is a monthly mitigation block. Although those are wicks, doesn't matter. There's still data inside of these wicks, and it is a mitigation block over here, and price can rally from this mitigation block. If it trades through over here, we can expect price on the weekly time frame to close either taking out this low over here. Let me just mark this low up here, over there, and closing some more of this gap here because price is currently inefficient at this level. And if price does that, it is likely to bounce off of that level. Now, it's also important to remember on gold that this here, I'm going to make this green, is a weekly order block over here. So if we have a deeper retracement on gold, okay, based also on the fact that if you look at the dollar index, okay, this little retracement we are currently having is likely to just potentially target these equal highs on the DXY, this dollar index. However, if it does not target these highs, if you look on the weekly time frame, there is a large imbalance of price on the DXY, okay, and the DXY giving the strength of the dollar. If it decides to target this weekly imbalance of price, well, gold will, what will gold do? Gold will just do the opposite because the dollar is weak and gold is stronger. So price will have likely a lesser retracement than even trading into this weekly order block. Okay, so you'd have to watch the price action. There's no guarantee of anything of what I say because it's all, we are just speculators in the marketplace. So if the DXY decides to take out those liquidities of what I just showed you here, so if it decides to take out these liquidity points, well, then it's likely that gold could also see a deep retracement into this close of this imbalance of price and then go for a bounce. However, if the DXY decides to continue to go down to fill this imbalance, well, then gold, well, instead of doing that retracement, it will just continue. And where it could continue from is there's a point of interest over here. So let's just clean this up. This is a gap in price or a liquidity void that had been half filled over here. So there is still some liquidity sitting below there. So you can see that that wick over there, this one here, has closed most of that gap. However, it is still got some gap sitting over there. And if you measure on the daily for discount price and you want to buy, you'll see that that gap lines up with our sweet spot area of about 79%. And if price were to come down to that level, well, there's also that point of liquidity sitting over here at that zone of price. Okay, if we see price come there down to this level, we would expect price to bounce, close that gap, test this order block and bounce up over here to continue up and potentially close some of this gap and possibly even test this 50% of this order block over here on the daily chart, something like that, to sort of towards the Fibonacci extension of target 1 over here. However, if price closes the remainder of this imbalance and we do not see this move, but instead a short move and price then start to trade lower, then it is likely to continue to target lower lows and take out liquidity below over here on that low as well. And then that would set up the likely scenario where price would target this bullish order block here on the daily time frame as the next low over here, because like I said, there's that liquidity void on the weekly chart which lines up with the daily order block where price originated from over here. Okay, so those are likely scenarios for gold to play out, but that would depend on the strength of this dollar, which to me still looks very bearish, although everyone was shouting that it's very bullish now because of NFP. I disagree. I still think it's bearish. A little bit of price action, and you can see that based on this weekly chart. It's just tested this weekly order block. If we zoom in here, price just tested this weekly order block and it's already rejecting. So I don't see any more bullishness unless it takes out some of this liquidity and then drops again. But it's very likely that bearishness on the dollar will continue. Any questions? Is that answering your question, Sham?
Yes. Thank you, Darren.
Anyone else? Hope, Wandy, Anton, Baby Trader, you guys are all here, but you don't ask questions.
Yeah, I could posted a question in the chat.
Oh, well, I'm just checking if anyone wants to speak on the mic.
Hello, Darren.
Hello.
I posted a question in the chat. Could you kindly check it out?
Okay, EU. Okay, so on EU and GU, we had a breaker making a bearish sentiment, but our structure and daily time frame is bullish. How would you play this? Okay, so Baby Trader asked you, our higher time frame bias is bullish, but the lower time frames, I'm assuming you're talking about the 4-hour, is bearish. Okay, so how would you play this? Well, essentially, you mark up your time frames that are higher, so you know where price will react from. So bullish order block over here. This bullish order block has multiple orders inside of it over here. And if you look closer, this is a retail trend line. So what does retail do? They will buy every time this trend line gets tested, and there is liquidity sitting below this trend line over here. There's liquidity below all of these lows over here. Okay. So what will retail traders essentially see here? That every time this trend line gets tested, they will effectively buy. And if we look at that on the 4-hour chart, it pretty much lines up with the same scenario here. So what we would see the institutions inducing the retail traders to do is, if they see a close below this trend line, they would likely say that this has become bearish, and when it retests, they will sell again. Now, we don't look for that, but it's good to know that side of the market and what they see. And essentially, until this daily order block gets broken, we are still on the premise that the higher time frame, the daily, the weekly, and the monthly, is all still bullish. So I would see that if price were to break this retail trend line, test this retail trend line, and come into our order block over here, we can essentially look for buying opportunities inside of this daily order block over here. But for a second, let's forget the fact that we know anything about trend lines, because we don't use trend lines. We just need to know where liquidity is in the market, and current liquidity that is recent and relevant to current price action is, of course, this equal highs sitting over here. So these are current equal highs of price on a 4-hour. If you look at this on a lower time frame, this is retail double tops over here. Retail loves double tops. They sell at double tops over here. So that is a double top, or equal highs as we like to call it. So we essentially know that that is equal highs, and that would be a point of liquidity sitting over there. So equal highs, as well as all of our order blocks that we have in place, we could essentially see a continuation of price to come in take out this liquidity over here, and once that happens, we could expect a rundown on liquidity, and for that move to sustain itself, obviously we would see all of these other lows being taken out over here. Now, another question was posted here, is how to select an OB with the most orders. Well, like I've just pointed out over here, if we zoom out a bit over here, when you see an order block that is responsible for a large move to the upside over here, so where does price in this move originate from? Well, from this order block here. Just make this red because it's a 4-hour order block. So price originates from this order block and then pushes price to make this high over here, okay? And at the same time, price comes in, tests this order block and bounces up again, but essentially this whole range is responsible from this order block here. Then when price comes back down to that order block over here, again, that order block pushes price up, makes another high over here. You can see that that high is higher than that one, and this is the same order block that created this high, that created this high. And if you see again, price came in and tested that order block, and what did it do? It made another successive move to the upside over here. So this same order block, without selecting any other order blocks, this is a strong order block over here. Price has tested this order block a few times, collected orders inside of this order block, and push price back up over here. When price came back down over here, this order block here was created, responsible for pushing price up over here. Then price came back down, testing that same order block over here, pushing price back up. Price came back down, testing that same order block over here, pushing price back up, pushing price back down, testing that same order block, pushing price back up, while still testing that order block. And if I pull it across, well, we can effectively see that that order block is still valid over here. This order block here has been tested and it has collected a lot of orders, and you can see that it is responsible for a move to the upside, and it hasn't been broken. Price is not closed below that order block, based on the fact that our higher time frame, this bullish order block here, is still in effect. And when I mark up this bullish daily order block, you will see that these two 4-hour order blocks I've marked up are in line with this daily order block over here. Do we all see that? Are we all happy with marking up order blocks that are strong? I'm sure that answers your question, baby trader. This is the blue box, which is the daily order block. Red box, 4-hour order block. Red box, 4-hour order block. You can see it's still inside of this daily order block. So very little work done on this chart, but you can see that inside of this zone, there is a lot of buying pressure over here. Next question. So when testing this strategy on a strategy tester, what time frame is best, since on a strategy tester I can't change the time frame? Well, Albert, that depends on you. If you have access to what's a trading view, well, then you shouldn't have a problem backtesting it. But if you're referring to MetaTrader, There is a software I can give you guys the link for where you can go and download it and test it using MetaTrader. But other than just using the default MetaTrader, you can't really do much. So I would suggest using a 4-hour time frame. That would be the recommended time frame. Anyone else got any questions?
Hi, Darren.
Yeah,
Can
sure.
you please have a
Go
look
ahead.
at the S&P or the Dow or NASDAQ, one of the other indexes?
Which one? S&P.
S&P or US 30? Yeah, S&P is fine.
What time frame?
Yeah, go to 4-hour.
Okay.
Okay, we had this massive retracement there.
Yeah.
Okay, and what what does it look like for the future?
Okay, well, this here, so obviously a lot of people trade the indexes based on the fact that
Yes.
it's very pipful. Okay, so when you look at something like this, you see that there is a retail trend line here. Okay,
Yes.
and retail traders obviously just buy as soon as this trend line gets touched. So the purpose of this is to take out the traders that are basically inside of the marketplace for a buying opportunity over here. Okay, so let's for a second forget that. We already know that that exists. The fact of the matter is at each swing low, there is liquidity, and indexes love liquidity. That's essentially the big game over here. So what has actually happened here is when equal lows or equal highs get created, they become target points. So this is a relative equal low, meaning it's not exactly equal, but it is still an equal low. Okay, so I would say that this equal low would essentially be taken at some point next week over here. That would be a very likely target, as well as this order block over here being formed. And you can see by this wick over here, price tested basically essentially the exact candle body over there, and price dropped again. Okay, so I would imagine that price would target these equal lows over here before doing any sort of further price action.
Okay, yes, I did think there could be more downside before turning up again.
Well, essentially, if you look, we had a big sell-off, and
Yes.
when this was obviously Corona, or they blame Corona, I don't blame Corona, I blame the fact that the market needed to crash at some point, and that's essentially what happened. This big sell-off over here accumulated a lot of sell orders, so I would still see some more downside coming based on the fact that there is a large amount of sellers in the market here who would have sold, who may still be holding their position. Okay, and you could actually see if I draw a line, what I mentioned earlier about a mitigation block, price is sort of reacting off of that mitigation over here. But I would expect lower prices to come and then only go up over here. So there's a lot of liquidity to the downside over here, but based on the fact that, you know, these things happen, that they just go up in an upward stream for eternity, they don't like to correct all that often. I do expect the S&P to go down based on the fact that there's liquidity to be taken, as well as any institutions that were in a sell over here and are now holding that sell, looking for a better price to get out in the market. They would want to see lower prices over here.
Okay, thank you.
Time for one more question. Anyone? Speak now.
Hello?
Yes, go ahead.
Yeah, there is a question. There is a question that someone posted about the dollar index, how it correlates with the major pairs.
Baby trader, I think I've covered this in a previous video. I'm sure I have, but basically the dollar index is the opposite of what would happen on EU or GU. So let me just use an example of EU here against the dollar index. Okay, so essentially, let's just clear this up. This is the EU and this is the dollar. Let's both put them on a 4-hour time frame over here, and the 4-hour and the daily. So essentially, we are looking for divergence, which is called smart money technique. Okay, so we have this happening over here, where it creates a higher high on the dollar versus the euro, and the dollar index is opposite over here. Okay, so how we define that whatever happens on euro USD, GBP USD, or other dollar pairs is opposite to what is happening on the US dollar. So, for example, USD CAD would follow the dollar index because it is the quote pair. USD comes first. USD comes first on USD ZAR. So that is the quote pair. Whereas XXX USD is negative correlation. I'm saying correlation, but it's divergence. So we see here, opposite is occurring. The mirror effect, that is what I mean by divergence or correlation, as retail traders like to call it. There is divergence occurring here. Higher high, dollar index, lower low. And that is how we use the dollar index to the opposite of what is happening on the pair you are trading that is dollar based. Okay, well, you guys are quite boring tonight, so no more questions, it seems like it. So